Welcome to the deep dive. Today we're tackling something, well, none of us really want to face, but we need to be prepared for it. We're talking about those tough financial times, maybe a job loss, when the income just stops.
Yeah, it's a critical topic.
Exactly. So our mission here is to pull out the most important, actionable tips from the sources we've looked at on managing money when things get tight. We want you walking away feeling, informed and ready.
Okay, let's dive in.
Right. So first up, the sources say, practice strict frugality immediately. That means hitting pause, like right now, on luxuries, shopping for fun, movie trips, restaurants. All that needs to stop cold.
And it's more than just, saving a bit here and there. Think of every pound, every dollar saved as financial oxygen.
Financial oxygen, I like that.
Yeah, it keeps you going longer. It forces that hard look at needs versus wants, which is crucial to protect what's truly essential.
Okay, that makes total sense. But tough times aren't just about money, right? Mental well-being is huge.
Absolutely huge.
So how do we keep our spirits up without, spending the little cash we have left?
Well, the sources suggest finding cost-free entertainment. And this isn't just about saving cash. It's actually a strategy for resilience.
How so?
By choosing, say, home entertainment instead of the cinema or exploring a local park, not the mall, you stay emotionally stronger, you find joy in simpler things, it builds resourcefulness, which is, a great skill anytime.
Good point. Okay, now for a really, really critical rule from the sources. Avoid taking new loans.
Oh, definitely.
They're pretty clear. Unless it's an unavoidable medical emergency, just don't do it when you don't have income.
That's the hard line. Adding debt when you can't pay is digging a deeper hole.
But what about existing loans, like EMIs, regular payments?
Right. Ideally, you'd use your emergency fund to keep these payments going. That's what it's for.
And if that's not an option, or not enough?
Then you got to be proactive. Don't wait. Contact your lenders immediately. Ask them. Request a temporary moratorium, maybe for about 3 months, ideally. It buys you breathing room.
Okay. Contact lenders. Ask for a pause. Got it.
And this is important. If you have any savings left, prioritize paying off high-interest debt first, like credit cards. Get rid of that if you possibly can.
Because that can spiral fast.
Exactly. Nip it in the bud.
Okay, so manage existing debt carefully. What about assets we already own? Can they help?
Yes, definitely. The sources talk about making your existing assets work for you. Don't just let them sit there.
What does that look like in practice?
Well, you need to look at what you have. Anything appreciating, anything that could generate cash now. The sources give a great example. Smart pledging gold.
Smart pledging.
Yeah, basically using your gold as collateral for a short-term loan, but at a lower interest rate than, say, your credit card. You could use that cheaper loan to pay off the expensive credit card debt. It's about being strategic.
Okay, using assets strategically, like gold, or maybe renting out a spare room or a vacant property.
Precisely. If you have a vacant plot or a house, maybe rent it out temporarily, get those assets productive.
Right. Making assets work. I like that framing. Okay, next strategy. Part-time work.
Even small gigs?
The sources say this isn't just about the money, though, is it?
Not at all. Bringing in some income, any income, is a massive morale booster. It really helps fight off that feeling of helplessness, maybe even depression. And it's also a good time to, have honest talks with the family, see how everyone can maybe chip in.
Makes sense. Teamwork. Now, something that sounds counterintuitive, maybe, using this downtime to upgrade skills.
Yes. The sources frame unemployment not just as a crisis, but actually as a potential opportunity.
An opportunity for self-improvement.
Exactly. For strategic upskilling. Think about it. You suddenly have time you didn't have before. Use it. Enroll in courses relevant to your industry. Read books that boost your career. Watch educational videos. Learn new techniques.
So the goal is to come back stronger.
Precisely. Become more employable, more valuable. Aim for a comeback that actually puts you ahead of where you were before. Turn a negative into a long-term positive.
Okay, one final point. A real must-do, according to all our sources.
Ah, yes, the non-negotiable one.
Keep paying your insurance premiums. Health, life, whatever you have. Don't let it lapse.
Absolutely critical. That small premium you pay today. It provides potentially huge protection for your loved ones against massive risks tomorrow. It's your safety net. Don't cut it.
So, wrapping this up, what's the core message for you, the listener? It's that these strategies, taken together, give you a roadmap. They empower you to face financial challenges proactively, with resilience.
Yeah, it's about navigating the storm. But maybe there's a deeper thought here, too.
Go on.
Beyond just surviving, what if you viewed these tough financial times as a sort of crucible, an opportunity to forge real resilience, build genuinely productive habits, habits that actually serve you long after the specific crisis is over?
Turning adversity into a foundation for future strength. That's definitely something to think about.